In this video, we're going to be discussing 401k loans and the top 4 reasons why currently they're better than traditional loans, especially if you need cash now.
We will also discuss how the CARES Act will affect 401k loans. Stay tuned. What's up, people? It's Nadia
And Nicole,
bringing you another installment of the Wealth Twins Show,
where we give you the best tips, tricks, and inside scoop to help build wealth on your road to financial independence.
And what does that mean, Nicole?
It means we're trying to make work optional for you,
AKA fire your boss. So if you like what we're saying, make sure you subscribe and hit that notification bell. We're making these videos weekly.
and you don't want to miss them.
All right, so let's jump into it. So when it comes to 401k loans versus a traditional loan, it might be a better option for you. During this economic downturn, a lot of income is not stable. Maybe you still have your job, but your spouse has lost theirs and expenses need to be paid and you need a large sum of cash. Right? 401ks could be the answer for you. With the passing of the CARES Act, you're now allowed to borrow up to 100% of the money you have vested in your 401k, up to $100,000, whichever is less. So if your company has a 401k plan that you're allowed to take a loan against, you may want to look into this as an option.
Now, normally we don't suggest taking out a loan against your 401k because that's used for retirement. However, we're living in unique times right now, so we have to be realistic. So with that, let's go through 4 reasons why it's better to take out a 401k loan now.
Okay, number 1. A 401k loan, you're able to pay this loan back over the course of 5 years. And the interest is paid to you, not a bank and not a corporation. Okay? You also have no prepayment penalties on this loan. Your payments are taken through a payroll deduction.
Now, number 2, credit. Credit is not a factor when it comes to 401k loans. Now, traditionally, you could be denied a traditional personal loan based on having bad credit, or you can receive a very high interest rate that's tied to your credit score. However, when a 401k loan, you are actually borrowing against money you save, so therefore credit is not a factor.
Yeah. Number 3, with the passing of the CARES Act, there's been a rule change when it comes to 401ks and when you have to pay them back. Now, before, if you lost your job or you left your job, you would have to pay back this loan immediately. With the passing of the CARES Act, you now have 1 year to pay back that loan. But be careful. If you don't pay back the loan within 1 year, you will be hit with a 10% penalty fee, and it will look like it was income to you, and you will be taxed accordingly.
Now, number 4, interest rates. Now, if you're going to be making a loan and deciding to take a loan based on interest rate, the 401k loan is better. On average, personal loans, the interest rate on a personal loan is 9.5%. However, for 401k loans, they're tied to what's called the prime rate. The prime rate is currently 3.25%, the lowest it's been since 2008. And 401k loans are usually 1 to 2% above that. So if you're doing based just on rates alone, it's much better to take out a 401k loan than a traditional personal loan.
Yeah. Now, keep in mind, what we stated in this video applies primarily to 401k loans that have been taken out after the passing of the CARES Act. If you took out a 401k loan before the CARES Act passed and in another year, this may not apply to you. Okay? It's better for you to check with your plan provider to see what actually does apply to you with these new rules passing.
Now, if taking out a 401k is not an option or you might not be comfortable, check out these videos when we show you how we save and how we budget to make sure that we have money in those times when we need it.
Yeah, and if you like what we're saying, make sure you give this video a thumbs up and share it with someone. We will love the feedback too.
And as always, remember, your manners will take you further than your money. And we'll see you in the next video, guys.